afternoon, everyone. Welcome to the second track of day two of DSCI FinSec Conclave. This particular track session is going to talk about DeFi, the decentralized finance, which is apparently a parallel world in making. We are going to look at this session from four tenets, from the standpoint of four tenets. First is inclusion, second is security, third is participation, and fourth is privacy. To take the discussion forward, let me invite Mr. Anshul Rustaggi, founder of Totality Corp, on stage. Hi, Anshul. Good afternoon. Next, can we have Mr. Nikhil Sethi, managing director for Zuvomo? Hi, Nikhil. Good afternoon. Next, can we
Hi,
have Mr. Sainath Gupta, CEO for KnitFinance? Hey, hi, Sainath. To steer the discussion, let me invite Mr. Amol Bhat, who is partner at PwC. Hi, Amol. Let me hand it over to you to take the discussion ahead.
No, thanks, Aditya, and good afternoon, panelists and Anshul, Nikhil, Sainath. Thanks for your time today. Um, uh, this is very topical. There's so many disruptive events happening all over, but this specific topic, DeFi, in terms of what's happening, is very topical in terms of cryptos and a lot of talk that happens today. So just before we even kind of get into the nitty-gritties of participation, security, privacy, I would maybe first start with possibly Nikhil, just to kind of set a little bit of context of what's all this jargon about, what's SEFI, DeFi, what does it really mean, what's the real difference, and then we kind of based on that really build it further.
Oh, yes, absolutely. Thank you, Amol. You guys, who you might be wondering, like, what are these fancy terms, DeFi, CeFi, NFTs, and all? For now, we'll stick with DeFi and learn what that is. So, usually, when a transaction happens, so let's compare centralized finance versus decentralized finance. Let's say you're making an NEFT payment, like, so the payments, you use your banking app, the payment is approved by the bank as well as the RBI, and the other person gets the payment. In the case of blockchain, obviously it's decentralized. So you need to have multiple validations on the blockchain to confirm the transaction has been done. Right. So that's how the overall transaction work. Now here, you don't have a centralized wallet. In the case of Paytm wallet or your bank account, you have a bank account. So here you have something called a decentralized wallet. And the most popular example is MetaMask. Right? So it's a browser extension, right? It's an app, and it's all decentralized. Like, you don't need to have a password to access the app. You just need to have the security key. That's why, that's the old phrase coming from that: not your keys, not your Bitcoin. So it's a decentralized wallet which has access to your wallet, access to your funds, right? So you connect your decentralized wallet to these banking apps. Let's say banking apps for the decentralized world. It could be Yearn Finance, it could be Uniswap, it could be PancakeSwap. And these apps, or we should call D apps, which is decentralized apps, can access your funds. And then the usual lending and borrowing takes place. Right. So there's no central entity like RBI, Paytm, or any other bank, right? It's direct transaction happening using smart contracts, right? So let's say you're lending the money. So you're lending the money to the smart contracts. So you allow the smart contracts to access your wallet, decentralized wallet, and then you have the lending rates, and then the person is borrowing the money again. He has to you know borrow against the collateral, which is 50 or 70% of his holding. So that's the overall picture of how DeFi works. Now, in the context of crypto, in 2020, the DeFi TVL, which is a total volume locked across all chains, was less than $500 million. That's the first time I heard about DeFi, this term called DeFi. And that steered, or that triggered, the real bull run in 2020, after PayPal. And then you had the big players coming in. So DeFi is so critical to this space. It steered the bull run, triggered the bull run. And right now, the total volume locked is over 200 billion. Right. So that's the kind of growth we have seen. So So we've seen big players, big exchanges coming up. So even the CEO of Binance, CZ, has mentioned that okay, decentralized exchanges is a way forward, and centralized exchanges will cease to exist, right? Because what is happening in centralized exchanges, you're sending them the money, but in decentralized or wallets or DeFi, you have the absolute control on the money. Banks can die, Binance can die, WazirX can happen. Let's say some hacks happen, but when you have money in your wallet, it's there to stay. So that's DeFi for you in a nutshell.
No, Nikhil, thanks, and thanks for setting that context. It just makes the rest of the conversation very, very easy. So, but having said that context, maybe first you, Sainath, is there anything a preferred one between CFI and DeFi, or you think both of them have their own pros and cons, and then we kind of go through the participation story, but just a very, very neutral view in terms of what you think which one is better.
So I think this question is for me. Uh, okay, is it possible to rephrase the question once again?
No, so I was saying, is there a preference of one or the other, or both of them kind of come up with their own pros and cons in terms of what they provide?
Yeah, great. So it's a use case to use case. So DeFi in terms of user experience, it's a long way from mass adoption. You need to know how to use a MetaMask. You need to know how to send money to a wallet, then how to deploy right assets. There is a learning curve that not many people will be ready for that. So DeFi is still a bit away from mass adoption, but yes, early adopters have lapped it up. So definitely it has a scope for mass adoption. But it also comes with other issues like there's no guarantees. Like we have seen many suicides happen with the Luna crash. In 2018, I know a few cases myself when I was uh, that few guys actually lost huge money in Bitcoin crash in 2018 and committed suicides in India also. So there's a, there is a lots of uh, there's lots of learning curve and time before the DeFi becomes huge, but uh, CFI comes with its own assurances. Like like if there is a fixed deposit at a bank, if a bank in India goes small, how RBI guarantees that 5 lakhs a month. But in DeFi, there is nothing. I know a guy who had $1 million. Now it's not even worth $60. So it's cautious. It's early days. So it depends on use case to use case. Like I'm one of the few guys who can say has been into crypto from past 2 years. I've seen like use the Amol way back 60 times. So it's going to be there someday. With lots of use cases being there, any government supporting it. So yeah, so my ultimately I would suggest like depends from use case to use case, but which use case you're trying to use with solution.
No, sure. So I think a great way to kind of just set the context. So
May I add a
maybe
little point
Anshul,
there?
yeah, Nikhil,
Yeah.
yes,
So,
absolutely.
Sainath rightly mentioned it's the centralized
Yeah,
exchanges or the custodial platforms which will set the way for blockchain adoption, because you can't expect people to know the technicalities of setting up a DeFi wallet. On the other hand, decentralization is the holy grail. That's why we are in the game, right? So they may pave the way for
Nikhil,
the
is it
wider
possible to
adoption to
speak a
take
bit
place.
loudly?
Yeah. So CFI may pave the way for the wider adoption to take place, but the holy grail remains the decentralized world. Like it's a paradox, actually. If we are in the decentralized space talking about crypto, and then you have a central entity as big as Binance, holding billions of dollars, right? So the way forward for the wider adoption is CFI, and the end product has to be DeFi or a decentralized wallets or DeFi protocols.
No, sure. I think great points made, Nikhil and Sainath, and maybe now I'll kind of turn to Anshul. So Anshul, clearly CFI, DeFi. I think as Nikhil just kind of set it, uh, there are use cases. DeFi looks like to be the future, at least in the context of how the world is evolving. But I'd like to know from you in terms of where is the growth, or what are the areas where you think these use cases would kind of get adopted very, very quickly? How do you see the whole growth story, or from a trend perspective, this to evolve over the next couple of years, knowing well that both of these are going to be here to
Hey
stay?
guys,
Hi,
yeah, sorry.
Sainath. Sorry. Yeah, Anshul, you want to kind of take that up?
Yeah, sure. So I think there are two aspects which I think about when I at least think about DeFi. The one is there has been like what Nikhil was talking about in terms of TVL. Most of that TVL adoption has really come in terms of alternative assets and alternative finance with respect to the decentralized finance, and the other would be how DeFi plays a role with respect to other use cases within blockchain, right? So, for example, we are a decentralized metaverse company, and every game metaverse will have elements of DeFi within them. So there'll be these two sort of drivers and economic drivers of growing DeFi ecosystems. As far as the alternative asset route is concerned, that'll sort of come in and go up as people discover sort of different use cases. So, for example, stablecoin was a great use case. But with Terra Luna episode that really happened, there has been a sort of a revisit as to are stable coins and what do they mean. I kind of think that actually after the Terra Luna episode, we will now see use cases which will be even more sort of exhaustive and a lot more resilient in terms of building them. And actually, it's an unfortunate event because people have lost money, but as technology grows, this will be things that people will start educating themselves to actually come to this market, and it'll be a great way for people to see why peer-to-peer finance and decentralized finance will become very powerful as an alternative asset class, as an alternative way for you to do transactions. So some of the use cases there will be trade finance, right? Like companies will actually enable trade finance, will be startup investing. I know Zuvomo is a platform looking to enable startup investing. So there'll be many platforms which enable sort of flow of money, whether for investment or debt purpose or loan purpose, without having to go through the normal CFI route. So it will be faster, cheaper, and the risk assessment will be done through the right bodies. So that's one advantage. The other, which is the use cases of gaming, metaverse, shopping, social commerce, etc., will definitely have elements of DeFi in it, because A, it's not just about making payments itself, but B, with DeFi and tokens and NFTs in general, you can now incentivize, whether that's your user base, your NFT or crypto investor base, people who can help you do marketing and make it a lot more democratized to actually create a much larger sort of ecosystem. So I think we'll see growth from both these perspectives.
No, great. I think great points made, and maybe Nikhil, just back on to you on this specific one. Do you believe that this could kind of increase, or this will help inclusion in any form? I know use cases could take a little time to build, but at a concept level, do you really believe that this would definitely push more inclusion? This could bring in more use cases for the larger audience, and do you really feel that that's the way the ecosystem will really move forward?
In early 20s, early 20,000, like when we had the dot-com boom, it took us a decade to have a functional website where we could actually make a payment. So right now we are in a super nascent stage, not even nascent stage, where R&D is happening and we are trying and testing different things. So right now it's too premature, and that will actually kill whatever we are building if we are over estimating the impact, or you know expecting a utopian vision here, which is the wider adoption, or maybe banking the unbanked or something. So the lowest hanging fruit is to make sure DeFi is functional and the crypto players are using it, right? And which will happen, when we eliminate the Ponzi schemes, when we eliminate the scams which are happening, and to have a functional DeFi ecosystem where the new audience or a person who is not very tech savvy can get into DeFi. I think that will be the step one. And once that is sorted, we can move to the wider adoption stage.
Mm. No, sure. So, what, at least as a commoner, what I'm picking up is let the systems and the solutions evolve to a point when they're ready for the larger mass to kind of pick up, and then kind of laterally build onto more use cases. Until that time, maybe it's best left to specific use cases where it could mature to a point where it can be really taken to the next level. So, I think a great point made. So, Nikhil, just to continue with you, and then maybe I'll come back to you, Sainath and Anshul, in a moment. So, what's this all custodial, non-custodial options? What does it really mean as a commoner? What are the things that really happen?
Like we discussed, not your keys, not your Bitcoin. Like, so in a decentralized wallet, you have your keys, you have access to the wallet. You lose the keys, if you give someone else the keys, he has your funds. Custodial is custodial is CFI. It's nothing different. Like that is a bank or a payment wallet yet to have. So they have the access to your fund. Maybe the funds are insured, so whatever they claim, right? So it's a third party entity which controls your funds. Let's say the exchange gets hacked, or the custodial solution like Celsius and all, they get hacked. So you obviously will lose your money because you don't have access to it. On the other hand, if you have your money parked in Uniswap, which is getting you some LP fee, or you have parked your USDT on your finance, then you are unlikely to lose money unless something drastic happens, the smart contract get hacked. And the most beautiful thing is the audits are public. So Yearn Finance has the smart contract. So it's audited, and obviously it's an open source, right? So the likelihood of that happening is low, right? So therefore, there's no comparison between CFI and DeFi. If you have to discuss crypto, we have to stick to the non-custodial wallets.
Hmm. No, sure. And Anshul, back to you. Uh, in terms of how, and again, it's more a commoner's view. uh, what is better, like in terms of controlling, like putting everything together, or really distributed, but how does it really kind of span out in the future in terms of security, in terms of how you protect, because as you spread the more number of controls to be implemented, so on and so forth. So what's your view more on the protocols, the security, and all of that in either of the options?
Yeah, so I think, see, I think I'll say reiterate two things. One, Sainath did say that look, centralized finance is definitely has a layer of let's call it more due diligence, right? Is that due diligence enough? We don't know. We have been more used to having a centralized body do a lot more due diligence. Like that's the process with which most of finance has been developed, right? Whether that's RBI and the banks helping us do NEFT, RTGS, UPI payments, etc., etc. So there is that layer and a way which is do your own research in DeFi. That habit of everyone doing their own research is a habit that yet has to pick. So obviously, that unfortunately is also one reason why the number of scams, etc., that we were talking about will keep happening, because the customer base would need to educate themselves, right? That's definitely one thing. And I also concur with Nikhil that weirdly enough, even though blockchain actually solves for trust, right? And it has basically codified trust. However, the biggest gap for adoption of DeFi is actually building the trust layer. So I am a big believer that from like you said, a common person's perspective, the people and the ecosystems who will be able to win in this are not going to win on the back of, hey, I have a better technology, but they'll be able to win if they can communicate that it is actually a trustworthy ecosystem to create, which is very contrary to sort of what the reason is why DeFi and blockchain is being created. But we are in the early stage of adoption, and hence this is needed. In terms of which is better, look, use cases are different, right? Like for example, in India particularly, credit as a system is very unorganized, and there is a ton of peer-to-peer, family-to-family credit that takes place still in many industries, right? DeFi is actually perfect for actually going and tackling that, where you are saying that I know the entity I want to do it. It should be a little more organized. The payment mechanisms should be faster. I do not need a central body to come and tell me or do a credit assessment for me, right? So there are certain use cases within places like India and many other emerging economies where DeFi actually fits beautifully. The others where we'll say UPI is a great peer-to-peer layer. Can that also get into the DeFi world? I think so, right? Like if we are doing a social credit rating system, which will be something that will probably evolve in DeFi, can we also check for the bad actors over time? Can we also get the use of AI ML to actually even give us predictive scores for people, even if they do not have transacting data? I think that will be the case. So it would very much mean, I'll say one last thing, that we do hear a lot of people, and I think the Guggenheim CIO was one to, like, I think like a few months back, he was talking about Bitcoin going to 400,000. He was now talking about Bitcoin dropping to 8,000. And the crux of the argument was, hey, institutional adoption isn't really happening yet on the blockchain, right? And I kind of think that this movement is a very grassroots, bottoms up movement. It isn't a top down movement. And the reason that's important to understand is that we have to look at the actual use cases which benefit from adopting, rather than going to say that XYZ pension fund can now deploy $1 trillion of assets on the blockchain. That is not why this entire Web3 movement is coming. The Web3 movement is very bottoms up, and there are tons of use cases which will lead to that adoption. And in those use cases, DeFi is a lot better than CeFi.
So good. I think that's a very nice way to kind of put it. Maybe Nikhil, back to you, and then to Sainath. In terms of, and you've been in this space for a very long time. So how do you kind of pick up the protocols? Like how do you really decide what to use? What goes through? Like how does your thinking process really evolve around the TVLs, the top protocols to use, and so on and so forth?
Right. So last year we saw the boom of all these Ponzi's and farms, which you might want to call them. So, there are certain things we look at. So, we look at five things actually. So, one is the TVL. If the TVL is a few millions, at least a few $1 million, then obviously, you're more likely to trust the platform. Number two, my one of my friends says, if it's too good to be true, it is too good to be true. There were these DeFi protocols offering thousands or millions of dollars, millions of percentage of APY. So that's an instant red flag, right? And Ponzi's have been around for decades and all, so that will happen. It's a finance space. Number three, as Anshul mentioned, there are DYORs happening every day. Now there are other uh, community-based DYOR services which are there. To name a few, that would be Rugdoc or Apoclock, right? So they are reviewing all these farms or protocols which are launching, right? So they give you a red flag or a green flag, or they make you aware of this. Obviously, they're more informed and they do it full time. Number four, KYC, right? So the teams may not be public. It's okay to be anonymous, but these teams do KYCs on third-party platforms. So let's say a scam happens, they will release the KYC info and everything will be public. That's so. If KYC is not there, the team is anonymous. That is an instant red flag, and it stay away from the protocol. Number four, number five, in fact, that you should be listed on these sites like CoinMarketCap, CoinGecko, PooCoin, DexGuru, and all that. So this is the bare minimum you can do in terms of R&D before getting into DeFi.
Okay, back to Sainath. Any views that you like to add? And I think Nikhil put it very nicely in terms of how do you
Yeah,
really
actually,
make the selections. But
yeah.
yeah,
So a few things I will also look at is auditor. Who is the audit? Who has done the audit? Like, it's a Pexel, it's some unknown auditor. Then I'll also look at, is the project sustainable? Like, the project says it's going to give it an APY of 50%, 100%. There is no way that's sustainable. Then we look at who are the founders. Like, are the founders decent guys? Like, what was the history? Have them stuff? Like, they're completely unknown guys. Uh, then Also, it's like uh, how is the payout coming? Like, is the payout coming at set date, or is it like you can withdraw it any moment? And also the scheme behind it, like uh, is it a sustainable thing? Like if you look at in case of Aave, it directly, like there is a huge percentage of profit between the lending and borrowing. So when you lend, say it pays you interest of 5%, but when somebody borrows from it, it takes 10%. So there's a 5% net margin coming to it on a single. So essentially, that essentially makes the project owner to be more satisfied on running the project rather than like someday we'll feel it will crash and run away with it. So these are few aspects. Then we come on the social aspect, like who is backing it? Like are they on a big chain? Like are they with say like are they listed on Binance? Are they listed on many other exchanges? Like these exchanges also do bit of a deep due diligence. So at least rug pulls will not happen if they're on larger exchanges because KYCs are required. Go to the exchange, create, fund, they have done KYC. So these guys are known to not to run away with the money. But there is always another way these guys have been seen, like where like there will be certain vulnerability or a backdoor, and they say like that vulnerability backdoor was exposed or somebody else has exposed, and they take the money. There's nothing like 100% surety on any of this right now, as it's still very, very early stage. But yes, you can definitely give it a try. But to keep all your eggs in single basket. Uh, like lots of OGs like us, we actually when we are doing it, we try to keep it on different uh, like standard thing. None of our the largest basket of mine is like 10% of portfolio in one section. And be like one exchange, one wallet, or one protocol. So this way, even if something goes up, you don't go to zero on same day. So yeah, unless until a huge catastrophe has happened and everything has been, you don't you have to plan. Your money is safe. At least major portion of the money is safe. That's how you have to plan. This might be.
No, sure. Anshul, anything that you like to add, or anything that you've kind of looked at it differently in the past?
Yeah, I think this is really right. I think Nikhil gave a great list, and Sainath added to that in terms of what to look at. But I do think that sort of adoption from a bottoms up perspective is what I think is probably key. I do think that most projects today are really focusing on what I would just call voodoo economics, because it almost feels like whatever token supply you have, you can sort of keep giving that as incentive without having any intrinsic value, right? And I think what I'll just touch base on is intrinsic value is a value that you could really see in terms of value proposition over and above saying that, oh, XYZ thing gives 100%, 1,000%, 10,000% staking reward in terms of whatever the same tokens are. And why should the tokens become valuable? Because, well, if I'm getting into this scheme, there'll be 50 people after me, and hence let me get in early, right? And all of that unwind is what we are seeing happening right now, right? So I think the last thing I'll say is a focus and a check for what is the intrinsic value that is being built in the ecosystem is probably something that I think everyone should look at. And personally, I look at when I look at such projects, and even when we are building such things.
Sure.
But Anshul, do you think any DeFi project, you look at Yon Finance, PancakeSwap, Uniswap, so how are they deriving the value if you're talking about intrinsic value? It seems like it's all speculation.
Yeah, largely it is, right? Like, see, in some cases, I'll say there is some intrinsic value, which is, for example, if you are an NFT collateralization or NFT loan platform, why is it there an intrinsic value? According to me, even though you might say, like, look, largely all the NFTs are collectibles, do they really have intrinsic value? Maybe
Mm-hmm.
not, but it seems like there's a large audience that actually wants it. There's a large market that keep adopting to it, and hence, as an intrinsic service, will there be people where you can actually improve affordability? Then it makes sense, right? There are some which are doing the same for land. There are some which are actually doing projects. Exclusable is a good idea, where people are buying virtual lands and they're helping you construct on that virtual land. They're selling you villas, they're selling you 3D assets. So that's there. There are some which are solving for trade finance, which are intrinsic. But I think, like, if the only idea is that, it just seems like now it's such a great thing for me to say in hindsight for UST and Luna. But if the only idea is that, look, one ecosystem's taking reward supports you to get the other ecosystem, and that ecosystem's taking reward supports this ecosystem, this circular argument can't really work, right? It'll work to so I kind of feel like the entire DeFi market focuses on one thing really well, which is how do I lock supply, which you are able to do by giving staking rewards, and how do I create a marginal demand? Because as soon as you have a locked supply and there is any delta marginal demand, the prices just skyrocket because there is no supply, right?
Right.
So they have done that really well, and hence this filter of intrinsic value, right? So, for example, MakerDAO is a project I personally like. I think they have done something which are nice. I'm not talking about the valuation of it. I think there is something of value in the way they have actually built that particular project, and I think that's something that will be useful. Ethereum, I am a big fan of ETH layer one, because I think the composability of such a chain is very valuable and does provide intrinsic value. That's the way I look at it.
Excellent.
Sure,
Thank
I
you.
think uh, good way to kind of get into the next segment. So, Nikhil, back to you in that sense. So, from a security perspective, from a potential control perspective, like which wallets do you prefer, or is there in, like, do you look it separately than the protocols and TLV values, or you kind of it's kind of a mixed, or it's kind of an connected kind of a question to kind of address when you kind of pick up the protocols and look at the TVLs? How do you kind of really look at it?
Yeah, that's a great question, and it involves a lot of education. Like, you might be using multiple DeFi protocols. So that way, what you can do, you can use multiple hardware wallets also. So managing multiple MetaMask, or if you have a trust wallet and all, will be a hassle. So this is what I usually recommend. Get a few hardware wallets, and each time use a MetaMask for a protocol, just switch to the different hardware wallet. That way, as Sainath mentioned, you can maybe limit your exposure to certain protocols to maximum 10%, and that way they can access your funds and all. So that's one way. The other way is the obvious one. Use different wallets for different protocols, or for different systems. In fact, if you're using multiple systems, maybe your work PC or your home PC, then keep the wallets different. So multiple things can be tried, but hardware wallet obviously is the safest bet.
Sure. Anshul, any specific view that you have on this?
Yeah, so I'll say, look, a couple of years ago, when I was actually setting this up, I really felt like James Bond because of the whole amount of security around your passphrase and stuff. And there's a lot of talk like, this is very interesting. Like, put your passphrase, put it in this sock drawer, take it to your nanny's house, store it there, XYZ. Feels pretty cool. I do agree with Nikhil that, look, if you have a substantial amount of your saving inside, look at a hardware wallet, look at different areas, etc. I do feel that, for most people that I have interacted with, by and large, I would say 99% of the audience who are playing it here, as a percentage, it might be a very big amount of their wealth today, but as an absolute percentage of what wealth they will create over the next decade, it's pretty small. And I would rather focus energy and money spent on looking at projects, understanding these systems, rather than spending money on hardware wallets. That's my personal view. I don't own a hardware wallet. I do have certain percentage of my wealth in these. Am I worried about these risks? Absolutely. I mean, I'm worried about these risks even in CFI. Is that the highest priority for me today when I'm looking at these investments? Not even close. So I do take a contrarian view to say that, look at MetaMask, look at where you are connecting sort of your MetaMask, and focus your energy and attention there. rather than just blindly, just like you wouldn't blindly give OTP to anyone if they just asked you and gave you a call. There are tons of those scams happening. And in the same way, be vigilant about what you do with your MetaMask. I think by and large you would be safe.
Sure.
Right, right.
Sainath,
If
then,
if you have $500,000 or maybe a few crores or maybe a few lakhs, spending 5K, 5,000 rupees on a hardware wallet will definitely not hurt. Right.
True. Yeah. If you have that amount,
So
then
my
yes.
view is
yes, Sainath.
yeah. So in that, yeah, my view is hardware wallets is a good strategy always, especially as I put the money that you're dealing is higher. Hardware wallets also come with two issues. First issue is uh, misplacing, you find all these hardware or you forget the pin, the entire money is gone. Uh, and also many people don't know is, but I have been using hardware wallets for very long. Generally, hardware wallets life is like 5 years. So if you have something, don't think it's going to be there permanent. It's if you're thinking of a horizon of 10, 20 years, no. Always have your backup made when you're using a hardware wallet. I would definitely would love to show mine. Uh, uh, it's actually very beautifully made on because the seed is made on a very nice piece of metal shape. Okay, so in the case that I lose my hardware wallet, I have that, but not many people have such kind of backup plans. So you, you need to be careful. Have a backup seed, have a uh, because, how much money you're going to keep, which kind of wallet you want to use. There are wallets which got hacked with hardware wallets. And now there are wallets which are which has been secure for very long, but don't support many types of wallets. So you need to take that call when you use somebody doing the hardware, which kind of wallet you want to do, and why. That's my.
No, sure. So I'm just conscious of time. We are already at about 2:56. Nikhil, one last question, and then we'll kind of do one round of closing comments. So, what would you suggest to kind of just so that people can spot the scams early, or at least they're aware of? So, more an awareness question: how do you spot them? What are the strict no-nos or something that really kind of uh, are 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 areas or questions that come to your mind when you look at certain data points around whether it's protocols, wallets, and all of that?
Yeah, I would resonate with what Sainath mentioned. We should look at sustainability. And let's look at the biggest rug pulls which have happened. Safe Moon, which had a market cap in billions, right? And the later investigations happened, and we all learned that okay, the team was selling the tokens, the liquidity tokens, which was supposed to be added to the exchanges. This is in line. So spotting a scam. So we can't really spot a scam, but there are instant red flags which we discussed, which would be sustainability. Where are the million percentage of APY coming from? APY is coming from. Why is the team anonymous? Why are they not doing KYCs? Right? Why are they not audited by any company like Certic or others? Why are they not KYC? Why they are then refusing to share their data with Rugdoc, Apoclock, and so on? Why are they? Why is there no uh, willingness to be listed on exchanges or these third-party platforms like Dexguru and all that? So these things usually help you shortlist the project, and you don't need to be a rocket scientist here. Be a part of the community. That really helps. So before taking a decision, don't consult your friends and family unless they are experts. Join multiple groups on Telegrams or WhatsApp, whatever is convenient to you. Be a part of the discussions and get alternative views, and that will certainly help you make an informed decision. That will certainly help you educate yourself, and education is a key since we are at this very nascent stage.
No, sure. Anshul, any thoughts? And then I'll come to Sainath.
Yeah, I think I'll mostly concur with what Nikhil said. I'm a very big believer that just think about these things from a very common sense perspective. I do agree that if there are more openness in checks, and if the project has done a lot of community calls, they are open to share information, then I think there are lesser chances that it's a scam. I do think that you can't prevent 100% of these things. Like that also happens in C5, but definitely the chances reduce drastically. And I do think that people should stay away from trying to just get, like, 50x 100x prices in a matter of week, right? I think if that does happen, if something does look too good to be true, I think Nikhil said it earlier, then it probably is, right? So I think if you are looking to make sustainable returns, the project needs to be sustainable and needs to have an intrinsic value. If it doesn't, it whether it's going to be a scam or it's going to be an unsustainable sort of project that doesn't do well, either way you're going to lose your investment.
And there are chances that you might make money, and that time do not forget to book profits and make an exit. Usually people play it like a video game, that okay, every day they'll open a new DeFi protocol and park their money, which might work a few times, but it's always good to book your profits and make an exit.
Sure. So look at each DeFi as a stock by itself, and just make sure that you track each of them closely and make money out of it, and don't get into a trap. Looks like that's the mantra.
Stocks will
One last
certainly
question,
reassure them.
and
I'll probably see them as Ponzi's. Worst case scenario.
sure. So one last question. Any quick closing comments, Anshul? Way forward, whether both these things will coexist, and where is the next? Where's the next innovation? Not the innovation, but where's the next set of use cases really going to evolve the fastest?
Yeah, I think, like I said, I think they're definitely going to coexist for a while. I am super bullish on Web3. Web3 can't exist. Even if we look at use cases of gaming, metaverse can't exist without DeFi. People do need a lot of peer-to-peer trading. This is just natural that we are moving towards DeFi. As I said, for mass adoption, actually, I think the biggest puzzle to be solved is to get people to trust the DeFi systems. As I said, I know that's paradoxical, but that is what I really truly believe is required. And I think in terms of adoption, two things that happen: a lot of peer-to-peer lending and use cases like that, which are a very natural, almost a hand-in-glove situation for DeFi to come, will be places where actually DeFi takes place directly. And the second area we will see a lot of DeFi adoption will be through gaming and metaverses. Those are the two areas I think I'm particularly bullish on.
Sure, Nikhil, your thoughts?
I think apps like MetaMask need to simplify the adoption process, so a newbie doesn't feel like James Bond, as Anshul mentioned. That will pave the way for newcomers to come in, and they don't need to worry about the seed phrases and all. So maybe figure out a way how we can keep the decentralization in place, and so people are not at the mercy of the custodial solutions or the big exchanges to get the entry into crypto.
Great. Sainath, your last comments. I know we've already run out of time, but one last closing comment.
The next innovation, I think lots of innovations happening right now. It's like I'm seeing new types of lending models coming up, new types of derivatives coming up, NFTs being pledged, and lots of play on the NFTs with games, DeFi with games. I think one of the interesting thing is how do you do payments in metaverse. Uh, Many innovation lines are going to come out. I think now we're going from early adopters to mass adoption. So lots of innovative things we'll be seeing. Lots of failures will also come across, but I think mass adoption is like just 5 years ahead. So we have to be prepared for some interesting stuff that we're going to see.
No, good. Thank you. So once again, I think that was a great 45 minutes of conversation. At least I've got to learn a few things, and I'm sure our attendees would also kind of surely take a lot of insights from what we heard over the last 45 minutes. So once again, thank you to all of you. Thanks Anshul for taking time out. Thanks Nikhil. I think it's a great way and a way forward in terms of how we kind of start thinking about this. And Sainath, thanks for your insights. All of these were very very helpful. Look forward to stay connected and all the very best in what you kind of really kind of taking forward.
Thanks. Thank you for inviting us, and lovely to be here. Thanks, everyone.
Thank you, guys. Super
It's
insightful,
our pleasure. Thanks a
informative.
lot.
Thank you so much.
Thank you.